Okay, so this video is for everybody who keeps asking about the 20 pip and dip. So you want to go to 20pipsnddip.com and you want to go to sign up now. If you already done all this, then there's no need to, you can skip this step, but you want to go to sign up now. And once you click that, they're going to ask you for your username, first name, last name, Tradera username. You go in your Tradera back office and find that. Then you're going to ask for your TradingView username. And where you go to do that is you set up a TradingView account. And this is where all traders go to do their chart analysis at. My name is Raekwon FX. Whatever your name is, you enter that. Then you enter your trader client ID, and then you give them your email and your password. So typically, they should take about 2 days to be approved. I think I was approved in about three, maybe it was 2 days. But some people are telling me that it's taking longer for them. Just be patient with them, guys. They do have about 1,000 people trying to sign up for the 20 pip and dip, so it can get hectic. So once you're in the 20 pip and dip, it should look something like this. Log in for you guys. And it's going to basically give you a strategy where you can load your broker account with the bare minimum of $50 and you can catch 20 pips using 30 trades and you can make 5 figures using 30 trades. So that's pretty powerful. So I'm not going to go through everything in the back office that they have in 20 pips free, but what I want to do is show you the power of this 20 pips and dip. So you start off with the $50. Your first trade is a 2-cent lot. You catch 20 pips, which accumulates you $4 profit. And now your balance is $54. So the idea of it is you compound each trade until you're down to your 30th trade, and you should be making about 6,500, 6,400 profit now off of a $50 initial investment. Now that's crazy. Now let me show you the power of what the 20 pip and dip looks like. So this is a pair that I'm actually currently looking at the moment. And what's good about it is look, now that I got my 20 pip and dip indicator, I can see clear levels of things that's going on. So right here, when it was a buy, look how many pips was caught. Over 100 pips. So you could have easily caught your 20 pips about right here. And look how many pips that is, guys. Look, 20 pips. That is not a lot of pips. So literally, you would have entered a buy here, you would have got out here. So you're literally catching minimal moves and getting out of the market. You're not staying in, you're getting in and getting out. And my bad, this is on a daily chart. So let me put it on an hourly chart so you can see a better example. Look at this, guys. Look, you could have caught all that. You're right. But why not be safe and just catch from here to here? So that whole one candle would have been your 20 pips and you'd have been done for the day. Along with this, it told you a sell right here. Look, I could keep going with this. Sell. Exactly 15 pips. So not exactly your 20, but you wanna find good setups. You know what I mean? Like this is an amazing setup. I told you to buy here, and you're able to catch that. Let me draw this little line. You're able to catch the buy from here all the way up here. So how many pips would that have been? That would have been 55 pips. And basically pips is however much your lot size are. So say I had $1 lot size here, 55 pips, I earned $55. So I like the indicator because, look, let me show you if you don't have an indicator. Stuff that I do as a trader without the indicator is I gotta mark up all my zones. And I gotta start on the daily, of course, to get a better zone. So I mark up all my zones, my support, my resistance. So boom, that's a good resistance. Why? Because price has touched here numerous times. You can look back and price has touched here a lot. Boom. And then you can also do support about right here. Why? Because price has touched 3 times. 1, 2, 3, more than 3 times actually. So that'll be my support. So now I could watch this zone and see what's going on. And then for me, I draw a trend line just so I could see it's currently been in a pretty much uptrend for a minute now. And what's good about these trend lines are that you want to draw is I like to draw triangle trend lines starting from the lowest low to the highest high and the highest high to the lowest low. And basically you're putting price in this triangle. And what you're doing is you're trying to see if price is going to break out of here or if price is going to stay on this downtrend. So this isn't part of the 20 pip and dip, but what is part of the 20 pip and dip is this trend line. And basically you're waiting for this trend line to break. And once it breaks this trend line, now on this side of the trend line is resistance. And as you learn in the back offense, once something touches your resistance, you can pretty much bank on a break, retest, and a sell. Just like if it broke here, you look for a break, retest, enter your buy here, and a buy. So you want to wait for a confirmation. Right now, we don't have a clear confirmation on what's going on. To me, it's on an overall uptrend, especially if you go on the 4-hour chart. You can see a clear indication on uptrend. And this is why you want to start on a top-down analysis. You want to start on the daily so you can see a clear picture of things, and you want to go to the 4-hour. And then I like to initially look for an entry on the 4-hour, and then I like to enter on the 1-hour. So I'd enter on the 1-hour. And you see how long it's taking for price to show movements of down here. So that's why you enter on you look on an hourly, you look on a daily and a 4-hour, excuse me, so that you can see a better confirmation on price, because it takes a day for each candle to go down. It takes an hour for each of these candles to go down versus on a 15-minute chart. It will take you 15 minutes for these things to happen. So every candle is moving way faster. And that's why I suggest you to do a top-down analysis. Start on the daily, go down to the 4-hour, and you can see a good example. So look, this works for any pair of watts, GBP, JPY. And let me put my 20 pip and dip indicator. Actually, look, this is a perfect example. This is a previous trend line I've drawn. And look, you can clearly see I drew the trend line down here. It broke it, and look, caught all those pips. So now I'm on the other side of it. I drew this trend line, and I'm currently waiting for it to either break this trend line or show me that it wants to continue on the upside. So that's all you're doing, guys, is you're drawing a trend line. You're waiting for it to break, and once it breaks, you're literally using your measurement tool right here. You're just trying to catch 20 pips. Look how small that is. Small move. You're not trying to catch too much. 20 pips. That's from here to here, literally. That is not a big move, guys. That is a small move. 20 pips. Look, boom, boom. So once it breaks this line, you're trying to catch 20 pips and be out of there. And what's good is, watch when I put let me put it on the hourly chart so you can see clearly. Watch when I put, delete this so you can see better. Let me put, boom. So right now my indicator is telling me a buy, and that's a good sign because it is hitting this line. It's not crossing, so it still is acting as support, and that's why I want to wait for a confirmation, because it's overall on a sell, and if it breaks this, I can be more confident on a sell. So basically, you just want to be patient, guys, and wait for good setups. And this works for any pair. You don't want to just jump into a trade just because you see your indicator showing you something. That's just a confirmation on why you should be looking at that. That's why I like to take out my 20 pip and dip so you can see, look, I got my zones here, my resistance, support. And now this support turned into resistance, support, same stuff, same boring stuff. But look, it's touching my resistance. And what does it say when usually something touches resistance? You look for a sell. It's not always 100%. So that's why you want to use something like your 20 pip and dip indicator. Boom, what I just tell you? Look, it's showing you your zones now. If you don't have a good clear indication on support and resistance, look, 20 pip and dip is giving you that now. So now look, when it touches here, sell. Touches the zone, sell. Touches the zone, sell. Look, touch the zone again. It's looking for another sell. So my point is, I like the 20 pip and dip because it just, for new traders, it gives you a good analogy on what you should be looking at. So look, it doesn't matter what pair I go to, I can show you clear examples. Look, it told me sell here, and look how many pips. It told me sell here, and look how many pips I would have caught from here down. That would have been exactly my 20 that I needed. Exactly my 20 pips I would have needed. So basically, you're just looking for setups with this 20 pip and dip. And these moves already happened. So a perfect example would be for me to use these new indicators. And honestly, I don't really like going off of just these indicators. I like to go off of these zones that that things are in. So I'd be looking more so for, okay, price is on a buy, it's on an uptrend. So I'd be looking for price to touch more on this zone for me to get a confirmation on a buy. You know what I mean? Like wait for it to touch zones. Perfect example, just like a sell. I'd wait for it to touch this zone for it to sell, because if you look back, price always repeats itself. Look, I'm gonna draw this zone out in a gold zone right here. If you look back, price has touched here once, touched here twice, and I'm pretty sure I could go back and show you some more times price has touched this zone. Look, price has touched this zone again all the way in May 12th. All the way from May 12th to now, this is where the price zone has been for a good sale. So that's why I like on the 20 pip indicator, it just gives you a better look on what's going on. But before I even use the 20 pip dip indicator, I like to just do some fundamental analysis that's in the back office. All the stuff that I use, it came from the back office and TradeEra, and it actually opened my mind up on a lot. Like right now, I'm currently looking at USD/JPY. I have an uptrend, clear uptrend. This is my support. This is my resistance. It's ready to it's ready to break. To break, it's touching my resistance, but it's also ready, looking like it's ready to break. So I'm waiting for confirmation. I'm not going to enter this trade until I have a better confirmation that is continuing the upside. And how I know that is I look for a break. I have to break the zone, then I retest, then I look for that buy. And if I'm looking for a sell, look for a break through that zone, a retest, and a sell. And price always does this. And let me show you what a break and retest is. A clear example. Clear right here. Perfect example. It broke through here. And let me put the arrow real close right here so you can see. Because a lot of people don't have a clear understanding of what a break and retest is. And this is on a daily chart too, guys. Keep in mind. So the daily chart is not going to show you as clear. So let me show you a little clearer. A break and retest. Perfect right here. Look. So we got a break. It broke, retested, and now this would have been where you would have entered your buy at. You'd have been looking for an entry here. Nice entry, because it broke, retested, and then you could have used this for your long position. Your entry would have been here. You would have a stop loss of about here, a little bit below this. And your take profit could have been right here easily. And look, 17 pips. You're risking 17 pips for 74 pips. So I'm getting a little sidetracked as far as the 20 pip dipping strategy. But look, say you want to catch your 20 pips. Look, small moves. Look, 20 pips. Look at that. Beautiful. So you would have entered here, got out here for your 20 pips and been done for the day. You're not over here trying to make a whole bunch of money really fast. You know what I mean? That's not the concept of this. The concept of this is for you to compound your money. And another good thing is, look, I can show you clear examples of this all day. Look, uptrend, it's on a downtrend, highest high, lowest low. And look, as soon as it broke this trend, I could have been looking for a buy on any one of these times. So that's why don't always go off of the trend, guys, but the trend is your friend. So you want to basically always look for, you always want to draw out your trend lines. That's never something that gets old. And it's simple stuff. You draw a trend, wait for it to break it. Simple. So if there's any more questions you guys will want, just let me know. If there's any more pairs you want me to look at. But basically, 20 pip and dip is very nice because, I could take it back anytime on this chart and look. When it said buy here, look how many pips it caught. When it said sell here, look how many pips it caught. So it's pretty accurate. Just like right here, this is a lot of pips it caught right here. When it said sell, caught all these pips. So if you look and really just look back and kind of just trust the indicator, you can see very, very good confirmations on why you should use it. Me personally, I hide it, I do my analysis, and then I use it just to get a better confirmation on what I feel. And see, look, my gold zones are sell zones. All these are sell zones. So like I'm pretty good now to where I can mark these zones up without the indicator, but I still like to use it for a confirmation on what's going on. You know what I mean? And don't forget to use this. This is a very good trading plan to compound your money. Start your lots off low. Don't be ready to, make so much money in one trade. That's not how trading works. You want to be looking to do risk management and compounding your money. And what I mean by risk management is, even if I was entering this trade right now for a sale, okay? Let's let's look at it like this, or a buy, whatever. A buy because it's on an uptrend. You want to follow the trend. So look, I will use my long position, be entering about here, right? And then I'd put a stop loss of about right here. I'm on the daily, I keep doing that. Let me go on the hour so you can see a better example. Okay, so now look, long position. So say I entered here, put a stop loss of about here. Why? Because that's where the previous wicks have been rejecting at. Look, put a stop loss of about here or here, because that's where the previous wicks have been rejecting it. So the odds of it breaking here, I don't want to be in the trade no more if it breaks there. And I can put a take profit of where my gold zone's at. And look, that's a beautiful setup. I'm risking 14 pips to make 40 pips. Beautiful setup. So it's all about risk management, guys. Look, I'm not risking a whole lot of capital to make a lot of capital is what I'm trying to say. I'm risking this little bit of red to make all this green. So and that's what you want to be looking for is fire setups like this all day. Just like if I was looking for a sell, it'd be the same thing. Look, short position. I'd be entering here. I'd do a stop loss of about here. Take profit of my other gold zone. Look, and see how that works. I'm risking 20 pips to make 74 pips. So it's all about risk management, guys. You want to really use good risk management. And if it's not making sense, then, don't do it. Like, you shouldn't be risking stuff like this. This makes no sense. You shouldn't be risking this much to make this much. Like, that's like a 50-50 ratio. One, like, it's not making sense. You know what I mean? Risking 40 pips to make 40 pips makes no sense. So you want to be risking low stop loss to be risking it. That makes sense. Look at that. Beautiful setup. Your risk to reward is 4. So that means your risk to reward ratio is you can lose more. You can lose 4 times and still not really lose your account, if that makes sense, because your risk to reward ratio is making sense. So you want to just look for nice setups all day. And currently, this is a setup that I'm looking for, USTJPY. And I'm just being patient. I'm not rushing it, just being patient, waiting for price to let me do things. And keep in mind, guys, if price never shows me anything that I want to see, I don't trade that day. That doesn't mean you have to trade every single day just because you want to trade and make money. I don't trade if it's not showing me something. And there's a million pairs that you can trade, and it works for everyone. It's the same concept. See, like right now, price is showing me a lot of things, but I want to be more. I want to have more confirmation. Let me see what my 20 pips and dip is telling me. See, like for me personally, I'd have to be more patient, and I'd have to wait for price to touch up here to these zones for me to see something either here or here. And once it touches them zones, then I'll be able to feel more confident on a sell because it's also touching my other trend line, my downtrend trend line. You know what I mean? It's really just want to use confluence. You want to use everything that they teach you in the back office plus the 20 pip and dip strategy just to confirm yourself and feel more confident. Give yourself a strategy because I'm telling you, if you have no strategy and you have no plan, you're gambling for it. Honestly, you have to have a plan and strategy, and you should be telling me why you entered every trade. You know what I mean? You should have a reason for every trade. If you don't have a reason for your trade, then you're not trading, you're gambling. Like perfect example right here. I've been waiting on this for, let me see on the 4-hour. I've been waiting for this for a while now. See, I'm waiting for a clear break. And then I'm waiting for a retest to look for a sell, or I'm waiting for it to continue up on the upside to show me. But I'm not gonna know until it shows me something. I'm not just gonna guess and be like, well, it's obviously on an uptrend, so it's going up. No, you have to get a confirmation. And 20 pip and dip is telling me it's on an overall sell. So that's what I want to be looking for. And see, this is why the 20 pip and dip indicator is so nice because it really does give you an overall view of the market. If you're new like me, I can draw zones kind of fast now. Like this is a good support, resistance. Why? Because look, prices touched here 3 times, prices touched here numerous times. So this is a zone I want to mark. You know what I mean? And then another zone I'd want to mark is here. Why? Because price or here. It really is about what you guys see, but me, I'd mark here and here because it's showing me this is my support, this is my resistance, and this is where price has been ranging in. You know what I mean? And if it happens to break through here, I can look for a sell. If it happens to break through, I can look for a buy. So that's why, most new traders can't get these zones right away. So that's why I feel like 20 Pittman dip, pretty nice. It's a good indicator. I'm gonna be testing it out. I just actually started using it yesterday, and I'm gonna be testing it out this new trading week. So if there's any other questions you guys have or anything you want to know, just let me know. Inbox me. I'm definitely here to answer your questions. And keep in mind, guys, I'm still learning as I'm earning. I'm still learning. I'm not Forex guru. I'm learning the same stuff in the back office that you guys are learning. I promise you. So just apply yourself, really take this stuff in, and you really can see yourself making a lot of money if you just really put the knowledge in and really apply yourself. So any questions you guys have, don't be scared to let me know. I'm here for you, and let's all make some money.